you've gone from M1 and kind of intraday and now more to higher time frames and a bit more swing or day trading. Walk me through the benefits of taking yourself up time frames as opposed to deeper into the lower time frames.
So I think most people will go to the smaller time frame because in their head they're taught or they think and they believe that it's going to save them time. They can be in and out of the market quickly, but naturally people probably spend 2 to 4 to 5, even 6 hours on the 1 minute chart looking for an entry. What I think is when you trade on a higher time frame, so maybe the 1 hour or the 4 hour, which to some traders may even still be a smaller time frame, you can make your analysis in 5, 10 minutes, 30 minutes max, and you can see a trade, you can set an entry, and you can close the laptop because the outcome is the outcome. When people trade on the 1 minute time frame or the 30 second you see online especially, I just think you're going to take more entries naturally because you're going to see more opportunities, which just means you're going to leverage more in capital, whatever your risk is, and it's going to take more time. But because people lack confidence in their ability to judge where they think a trade or the bias is going to go, they will actually get their bias right all the time, a lot of the time, by trading with the direction. So if they wanted prices to go higher, they might say, oh, I want it to go higher, and it will go higher. But where they go wrong is they lose their entries. They can't find anything because they're on a small time frame trying to find something. And I also think that the way people learn, they start on this very small time frame. I was one of them, and they start on the very small time frame, and it's very fractal in that it moves the same. A candle prints the same way on a 1 minute time frame than it does on a day time frame. The only difference is it's faster. So if it's faster, you've got to act quicker, you've got to react quicker. If it's slower on a 1 hour or 4 hour, you've got all the time in the world to make the best decision you can to actually enter that trade. And it's a time element as well for me, is that when I trade on a 1 hour or 4 hour trade, I know I can set the position and the rest of the day is mine, which is the point of being a trader. It's to create more time. It's to leave your 9 to 5 job. It's to work less, but work more for yourself and create the ability. So if I can trade in the London session, take the trade, the rest of the day is mine to go and do whatever else I'm doing.
So I want to touch on this before we get into the nitty-gritty of the technicals. The illusion of becoming a trader is I have my job and I want a side hustle. So I'm going to pick up trading on the weekends and learn in the weekends and over the evenings. But what most people come to realize is that it's not something you do as a hobby. It requires that full-time effort. Is it an illusion or true that with time you can actually make it this almost passive thing, just a couple hours a day or even a week? Or do you have to treat it, if you treat it like a hobby, you get hobby results. So if you want real results, you got to treat it like a full-time thing.
It's a full-time business job, without a doubt. But the idea behind trading or being a trader is how you look at it. If you want trading to be a main income, which I don't think many people, when people get to trading is not their main income, because what trading does, it creates a foundation for you to go and do the rest of the stuff. Real wealth could be created or the only way real wealth is created is multiple streams of income, more than one thing. Because the reality is, I used to think, and people would say you could earn 10% a week, 5% a week, and you realise actually you can't. You can earn 10% in a week, 1 week. The next week you can win nothing. The week after that you can win nothing. And to get maybe 5% in a month consistently over the year would be great. Maybe 10%, great. But the reality is it doesn't work like that every month.
Yeah.
You just can't. You can't predict what's going to happen. You're going to have good months. You could have bad months. What your P&L looks like over a year, even 2 years, is the determining factor.
Yep.
And I think trading obviously is a full-time empire, but I don't think it's a full-time job in that it's going to be there. It's not going to be something you stick with forever. I speak to people all the time where they say, I just want to take a couple of trades in the evening and earn a little bit more and all that. And I think if you give that amount of part-time effort to it, you're going to get the part-time results back. It's you get what you give him with it, really.
I think it's also a sense of paying your dues, because what I've noted, as recently we did the US tour, and we were speaking to guys 50, 60 plus, is the journey of a trader has always been start off in the lower time frame and intraday, probably because they want to get fast results and higher returns. And then you see that evolution as someone goes through their 30s, 40s, 50s, all the way to their 70s. It becomes more day trading, then swing trading. and then it becomes just investing and long-term hold. And I think it's probably this idea of the headache is gone, and you have enough capital now for the smaller percentages to do the heavy lifting with the larger capital. And then you get that work-life balance. But I think trying to do that from day dot probably isn't the way, because you got to earn the right to do so. I really like what you said here of people get the direction right but mess up the entry. Would you say it's accurate to that majority of newer traders are more likely getting the directional bias right, and it's just the entries and the lower time frame that they're messing up?
Yeah, because from a higher time frame, from a daily time frame and a weekly time frame, it's very obvious to look at it straight. A beginner could look at it and think, that's going higher, that's going lower. Even on a 4-hour time frame, that's going higher, that's going lower. Which way is Bitcoin going right now? Even on it looks like it's going lower right now. Overall, higher time frame, it's going higher. So when you zoom out and actually look at it, it's a trend moving higher. So we've determined, let's say Euro, for example, or the NASDAQ, wants to go higher. It's retracing into a point where it's on a cycle, it's going to move higher. So we just have to buy price higher, because you're going to get a higher probability setup if you trade in direction with the trend. And a lot of people think, well, if the daily time frame isn't in the area I would like to buy at yet, I'll go onto a smaller time frame and I'll sell it into the area. So they're in a retracement, they're in a reversal on a higher time frame, and then they wonder why they keep losing, because the price has decided to move higher, because the higher time frame is going to determine the overall direction. And don't get me wrong, I know traders who have been really good trading reversals, but they're not traders who are trying to hold price longer. They're traders who just want a very small piece of the market, and they know exactly what they're looking for, but also they've got ample experience. People a complete beginner coming into the markets needs to understand the very fundamental of structure. Higher time frame is going to trump. If you're gonna buy or sell, buy with price that's moving in the right direction, and if you're going to sell it when price is moving in the lower direction as well.
Building off this idea, we can see that higher time frame narratives would be more trend, and obviously it moves slower, so there's less decisions per hour, so it's a lot easier to work with. And because you're mentioning here that the entries is what people struggle with, the lower time frame, and also the stop loss placement. Because if you do a lower time frame entry, put your stop loss at the bottom of that demand or above that supply, and then you have a larger stop loss, you can kind of hybrid lower time frame entries with higher time frame stop losses. Did you ever experiment with something like that?
Yeah, stop loss placement is one of the biggest things, because people can't fathom when they enter and where their stop loss is. People think, if my stop loss is really tight, they think I'm going to make more money, rather than if I allow the market to breathe, even if I bring it 15, 20, 30 pips lower and my entry is high, I'm looking for 60 pips or something like that. A lot of people can't fathom that, because they want to get a 1 to 5 risk reward, a 1 to 10 risk reward. I've tried all that before, and I noticed you can make a lot of money when you get a high risk reward setup, but when you keep looking for high risk reward setups on smaller time frames, I just think you lose more. And I think a lot of people struggle with losing in the markets. So when people come to the smaller time frames and they think, I've taken 20 trades this week, which is a lot, and I've lost 10 trades, they haven't got the energy to even think about the trades they might win, and mismanagement of how they handle the positions when they're in them as well, because they go to break even way too early, or they don't let the trade hit the take profit, so their risk reward doesn't count for anything. And essentially, they're trying to get these really small stop losses, rather than just let the market breathe, let the market do what it needs to do, trust your ability analysis, understand that it might take a day for your trade to play out, and you might get a 1 to 1, 1 to 2 trade out of it. It might come into profit, and it might be slow, and that might look like £100 to your account first, but once you scale, whether it's prop firm or live capital, that £100 turns into £5,000, and then it turns into £10,000, and then that's how you scale. You learn to start small, and then you build up as you go, and then once you've got a year, 2 years, 3 years experience, then you're not going to be thinking about you're going to be thinking about, I know where I'm going, I know where my stop loss is going to be, I know the market's going to breathe. Because a lot of people will say, and I'm sure you've had your experience as well, if my stop loss is too short, it will hit my stop loss and then it will move in my direction. If you have enough capital on a trade, your broker might not even allow your stop loss to be that, unless you trade futures and things, but your broker might not allow your stop loss to be that
for the
tight
risk of
as well.
slippage,